Hello, I'm Scott Bramwell, Managing Director at Cornerstone Wealth Management, and here today we have Len Templeton of Templeton Financial Services. Len focuses in the bond markets with a specific focus on muni bonds, and that's what we're here to talk about today. So Len, California continues to be in the headlines with respect to its budget deficit. Where are we today with respect to those issues?
Well, California certainly has a cumbersome political process in balancing their budget. It's definitely a problem. But I feel that it's not as bad as it was last year. And this year, for example, they have a $20 billion problem. Last year they had a $50 billion problem. So I think they're moving in the right direction. I just like to see them do it quicker.
And being citizens of San Diego, what about San Diego?
San Diego just had a recent study that came out where a grand jury made recommendations, and they talked about the unfunded pension liabilities and health care liabilities for San Diego. They're really cumbersome. The unfunded pension liabilities are about over $2 billion, and health care liabilities over $1 billion. And in 15 years, just the amount of money required to meet those obligations could be as much as 50% of the general fund.
And Greece of the European Union has caught the headlines more recently. And do you think California in any way compares to the situation going on over in Greece?
I think the similarities are that both of them have strong unions for public workers. There's a resistance to lowering labor costs, and benefits have been promised to both groups of workers. But I think that the similarities, that's about it. As far as differences, the default rate for countries like sovereign nations has been, maybe as much as 60 times what a typical muni bond default rate has been.
Well, moving away from California, municipal bonds in general have caught quite a bit of bad press recently. Being that you're a muni bond manager, what do you do in your investment portfolios to protect your clients' assets from any risks out there in the muni bond world?
Well, we're definitely interested in minimizing risk for our clients. We view ourselves as a conservative fixed income money manager. And so what we do is we focus on, say, essential service revenue bonds or bonds with pledged revenue streams, or maybe local district, school district GOs. Those types of bonds have much less risk involved, and they don't have the big problems of unfunded pension liabilities and the deficits that are so cumbersome out there right now. Their tax revenue stream is much more stable.
For clients and investors who are worried about interest rates, runaway interest rates and inflation, are munis a good option for those investors?
Well, we like munis, and really, to us, the answer to that question is we can customize portfolios with shorter maturity structures, and in that way, if rates would rise, they don't get hurt because they don't have long duration bonds, and we can then have money coming due that we can reinvest at higher rates.
Well, Len, thank you for your time. It's been a pleasure talking.
Okay, nice talking to you.